Hello and welcome to the December edition of my market newsletter. I continue to find there's an abundance of noise and confusion in the financial markets, and most Americans just don't know how to cut through the noise and get the data they're really looking for to make informed decisions. So because of this, I've created this newsletter, and each month I put together a summary of thinkings, research, and additional data that I hope you find useful, clear, concise, and educational for you to make decisions. Should you have any questions whatsoever, do not hesitate to call or email. So with that said, let's get into it. So do me a favor, and as I get started, I want you to take a guess. I want you to guess what the return has been from January 1st, 2020 to December 1st, 2022. January 1st, 2020 to December 1st, 2022. Seriously, what do you think it is? Because if you're like me, your memory doesn't always recall pertinent data at a moment's notice. So let me remind you that from January 2020 to December 2022, it seems like the entire economic, health, financial, political, and geopolitical worlds have all gone up in flames. Think about these past couple of years. We've had two downturns in the market of over 25%, COVID-19, high inflation matched with high interest rates, an incredibly divided government, along with Russia invading Ukraine, and most recently, Bitcoin's assumed collapse, which I'm not at all surprised or disappointed. So think about that. Have you answered the question yet from January 2020 to December 2022? So would it surprise you that the return has been 9.98%? When you're looking at over the total period of time, up 32%, 9.98%. So ask yourself, what did you have to do as an investor to earn that return? Because for those who stayed invested and hopefully increased their investments, their contributions over that period of time, whether through a 401k plan, IRA, taxable account, etc., you certainly did earn that return by staying fast in the face of incredible economic and financial headwinds. So please do not lie to yourself in saying that you didn't do anything, because you certainly did. You stood your ground. When just about every other news outlet was telling you to cash out or worse, buy into a fad like Bitcoin in 2020, 2021, and the first half of 2022, or maybe buy a work from home stock like Zoom or Peloton, which by the way are both trading close to the same price or lower than they were before COVID, or buy into a meme or trendy position like GameStop or one of the innovative ARK ETF series. Because tuning out the financial media, tuning out financial investments, like the ones mentioned before, tuning out your own personal FOMO, fear of missing out, because it sure feels like everyone else is making a killing with their trendy and fad investments. It takes discipline. Investing in what has historically worked over the past 100 years in typically boring companies that historically return 10% annually over long periods of time takes discipline. And for those investors who took the disciplined and boring approach, I want you to be proud because once again, history is repeating itself and you won the most recent battle of staying focused with your investments. So with that said, please do not hear me in saying that I think all the financial storms are over or the fads are over, because there is always a new one to be had. The current financial storm is far from over, and let me be clear, from my view, I believe we've always been and will probably always be in a financial storm. The financial markets have never been, and I don't think they will ever be, calm. The very nature of financial markets includes volatility, meaning up and down price movements. This is the very nature of broad equity markets and where the historical long-term returns have been found. Because you and I can always go down to the local bank, we can get a CD and have certainty. If you go and get the CD, you will have certainty that you'll have some type of return that, at least historically, has not kept up with inflation. In this example, what you're really doing would be buying principal protection, preventing losses, and then guaranteeing you're losing purchasing power in the future. Conversely, when you buy stocks, you trade your principal protection because stocks are not safe in the short term. They go up and down in value, but over the long term, they've shown to increase faster than cash, CDs, bonds, or inflation. So you'll be able to protect and gain future purchasing power. So remember that over the past 30, 50, 70, 100 years, stocks have returned about 10% annually. So what will stocks do in the next 10, 30, 50 years or over the rest of our lives? No one has any idea whatsoever. And if anyone tries to tell you or provide you with certainty in the financial markets, my belief is that person certainly should not be trusted. And this is why I encourage all investors to be long-term and goal-oriented. Okay, so with that said, I do want to pivot and change gears here and go into the additional data segment, where each month I get asked by clients what additional resources I'm looking at. And please hear me in stating I am not trying to predict anything whatsoever. This is just some of the interesting data I'm watching. And this month in December is really just an update to last month's data points. And really what I'm looking for are continued trends, which at least currently they are continuing. So the first thing I do want to reference though is last month's newsletter. So if you go out to my website and click blog, where this will take you are newsletters over time. And this is the one from last month. Did we just hit bottom? And in this newsletter, I make the argument that we may have hit bottom. And to be fair, who knows if I'm right or wrong? It'll take another 12 to 24 months to know for sure. Regardless, since that date cited, the markets are up close to 14%, which is from October 13th, 2022 to December 2nd, 2022. Now, the next data point is from the Bureau of Labor Statistics. Again, this is simply an update from last month. And really what I'm continuing to watch is the sharp decline in the inflation data. This started back in March. The next item is looking at M2 versus inflation. You see during this date range here. And this is something I've been commenting on for close to a year. And yes, I'm in the camp that inflation is tied to M2. M2 is money supply. We don't know. We don't know if I'm going to be right or wrong for another year or two or more. But I sure like what I'm seeing because the trend is continuing as M2, this black line, is continuing lower, and inflation, this red line, is also continuing lower, also which is seen from the BLS website just mentioned before. In addition to this, the break-even inflation rate. The break-even inflation rate from the Federal Reserve, the 5-year break-even inflation rate is 2.5. In October, it was 2.6. It was 2.1 in September, 2.5 in August, 2.7 in July. And when you expand the chart to the max history, you're going to notice, if you go to the website, you click on max history, you're going to notice we're just about on par with that long-term average. And then the last data point I want to go to is, again, the Federal Reserve balance sheet. And the Federal Reserve is following through on its statement made in May 2022 of reducing the balance sheet by $47.5 billion per month in months June to August, and then accelerating this and reducing the balance sheet by $95 billion per month. This is why you can see this decline happening here, and then all of a sudden it looks like it's starting to accelerate, because it is. And this is something the Federal Reserve has already come out to say, and as I've written since the beginning of the year, reducing the size of the balance sheet and in turn reducing M2, I personally believe is a key measure to bringing down inflation. Okay, so with that said, always keep in mind that we do not know what the future is going to bring. There's just no way to do it. And we cannot control what the market does from here, and we cannot predict when the next market downturn will occur. But we can control our behavior to these outside events and continue to stick with your long-term investment strategy. As always, I want to say thank you for your trust. Thanks for tuning in. Should you have any questions, please do not hesitate to contact me. Thanks and have a great Christmas.